The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Hello and welcome to Squawk Box. Here are your headlines today. The Nasdaq scales 17,000 points for the first time ever, pushed higher by Nvidia, but the Dow slips 200 points, weighed down by health stocks. The IMF upgrades its outlook for China, now expecting the country to hit its 5% growth goal this year after a stronger than expected first quarter.
Israeli tanks advance to the heart of Rafah for the first time. That's despite growing international outcry over its military operations in Gaza. And polls have just opened in South Africa, with more than 27 million people set to vote in the country's most competitive election since the end of apartheid. Welcome to your midweek event. And of course, we are going to unpack the market for you here on Squawk. And it really has been an interesting one across the United States in particular. Yesterday's Wall Street movement was really looked at because it was all through the eyes of Nvidia, but really just to focus in on quite a few different aspects at play here. The Dow Jones Industrial dipping off then around 0.5%. All three of these major indices are still anticipated to get positive months. In fact, significant gains then when one takes a look at the month-to-date figures. The Dow has already added 2.7%. The S&P as well as the Nasdaq are 5% and 8% higher respectively for this month. So significant gains for the month of May so far. But really just wanted to point on how the Dow lost near 200 points, more than 200 points in fact there, but it actually had fallen a little bit more, around 300, so recovering some of those losses in fact. The S&P just picking up though, and that is despite 350 stocks in negative territory in the session. Some of the movement is Nvidia, but we'll unpack that in just a moment. What I want to focus on also is the health stocks. This was pretty interesting actually just yesterday. Healthcare stocks were among the worst performing, but do also remain on pace to post monthly gains this month. Significantly, there was news outflow yesterday. Johnson & Johnson has entered into an agreement with Numab Therapeutics there. That's a $1.25 billion deal, so that's moved things. Healthcare, the Japanese conglomerate Asahi Kasei has also made a $1.1 billion takeover bid for Swedish pharmaceutical company that's Calliditas Therapeutics. So a lot of movement in what is a space that has had some consolidation, looks like it may continue to have consolidation, and that has meant healthcare stocks actually went a little bit lower in yesterday's trade though. That's going to be an interesting one to look at. Does that trade continue? Or will you see further consolidation, and will that move the market quite significantly then? As I said, Nvidia being very important yesterday, near 7% uptick then in that stock price just yesterday. Overall, of course, the Nasdaq passing that 17,000 point mark. Of course, this is on the back of that earnings picture we saw even just last week, of course, having pointed to that 10-for-1 stock split, plus the earnings outlook still looking very positive then for the company, even beating still on the earnings front. Significant movement then across the sector. In fact, we'll continue to play out the details when it comes to Nvidia, the AI story, not just throughout the show, but really on later segments as well. Let's unpack the Treasury story then. Treasuries actually moved higher as well than yesterday. 4.5. We've hit that mark then for the 10-year note again just yesterday. A government auction of treasuries that saw weak demand, particularly on the 2-year and the 5-year note, was the reason we saw the 10-year then go past 4.5. 4.56 now is where we're at, inching ever closer then for the 2-year note back towards that 5% mark, which of course we had seen just last year as well there. Stocks have struggled recently then when you're seeing the 10-year hit 4.5. So will that be a sentiment that continues as well throughout this time? Onto the dollar crosses. Stability is the word there when it comes to this one. Of course, ahead of the Fed's preferred inflation gauge figure then on Friday. That's PCE numbers anticipated to come out then stateside. Of course, Europe also has Eurozone inflation anticipated to come out on Friday. So you'll also watch out for euro dollar in anticipation of that. Sterling at 127.53. Very interestingly also, for the month of May, the euro's on course to gain around 1.7% so far for the month of May. The first month of gains this year for the euro dollar. Of course, Friday's movement will also be significant to that. Sterling is on course for a 2% gain as well in the month of May. Asian market picture then. We saw negativity yesterday across a lot of these countries, and that seems to be continuing outside of the Shanghai Composite, which is up 1/3%. I made note of health stocks, of course, they're very important. Japanese conglomerate Asahi Kasei making a $1.1 billion takeover bid for Swedish pharmaceutical company Calliditas Therapeutics, then bolstering some of its specialty drugs, broadening its geographic footprint as well. That will be a movement to look out for then, as the Nikkei is down 0.5%. Hang Seng, a big drawdown there though, 1.5% so far in this morning's trade. Karen.
Arabile, thank you very much. Let's pick up on the markets conversation with John Plassard, who joins us now, Senior Investment Specialist at Mirabaud Group. John, the flavour of the market yesterday, we had early messaging around the set from the Minneapolis Fed President Kashkari, who was talking about higher for longer. That market message resonating with a lot to return to Wall Street after a long weekend, and just picking up on the narrative that we may not be getting a rate cut anytime soon, whether that's September, November or December, and the market has been changing those expectations. What do you make of the prospects of stocks to continue extending out the gains from here when the rate cuts do not seem to be within sight?
So, Karen, thanks for having me. I think what happened yesterday on the market was exactly what the market is telling us, the economy is telling us. On one side, you have Nvidia, all the what is around artificial intelligence with Qualcomm, AMD, etc. And on the other side, you have the real economy that is suffering because, in fact, keeping those rates high enough to combat, I would say, the inflation is something that the consensus was not agree with at the beginning of the year. I just remind you that the consensus was betting on 6 rate cut for the Fed this year, and now we're almost at 0, as you just remind us. So at one point, I think we're not prepared yet for that hawkish tone that will keep on staying in the market until at least the end of this year.
John, the reality is that some market participants who have the bets on the table are hoping that the hawkish members of the Fed are wrong, that the data will ultimately prove them right. We've got some PCE numbers later this week. Do you think the data could give us some wildcard surprises suggesting that we've got softer inflation coming through?
Not really, because, on one side, you have, of course, softer inflation rate. If you look at the CPI in April, it was at 3.4% on an annual basis. That's a tenth of point less than in March. On the other side, the unemployment rate is lower than 4%. So I don't think just one figure could change everything. If you look at the narrative since 2022, Jackson Hole 2022, Jerome Powell said that the rates should stay higher for longer. And here we are today. And I think that that was misunderstood by the consensus. I think the soft landing, that's our bet, but I think the soft landing would be hard to achieve, even if the data, this PCE should be lower than expected.
Yeah, and I mean, with that being your anticipated trade still, though, John, isn't it? I mean, you're still anticipating a soft landing at a 40% chance, as you put it in your notes as well. As this data, as you're making note of, is still very choppy. You can't necessarily just trust one piece of this data. How sure is that soft landing in what looks like a difficult time?
I looked at the 11 period of Fed rate hike between 65 and 2019, and we counted 5 soft landing. But the purists believe that the Fed had only managed one soft landing in the last 60 years, 94, 95. And of course, Arbile, you know that the Fed chairman there was Alan Greenspan. And he even wrote after in a book that he believed that the soft landing of 95 was one of the Fed's proudest accomplishment. So, I mean, it is very hard to achieve. We still think that, of course, it's the last mile, you know, between 3 and 2% that is the worst to achieve for the Fed. We still think that we could be in a Goldilocks scenario, but as you said, Arbile, we are only betting on the 40% on the soft landing scenario because it has been very hard to achieve. And of course, we should not expect that even in 95, there was second round effect.
Yeah, John, have we gotten to a market that is now bottom up? And I say that because the S&P 500 equal weighted is barely up 5% year to date. S&P itself is up around 12%. The impact of those mega cap stocks is still very palpable. The market is still on the top end. When do we get to investing in the bottom up stuff?
When you enter a soft landing, but a soft landing, you know, and several of the Fed members said that last week. When they will start cut, it will not just be one cut of 25 basis points. So I mean that when the Fed will be sure, and that is that there are substantial progress in the economy and the war, not the battle, the war against the inflation is won, if I can say that. That's the moment where we can look at those stocks that, of course, had a poor performance since the beginning of the year and last year. And the mid caps, for example, European, but also US mid caps should be those stocks winning when this soft landing is achieved.
John, can I bring up the debt auctions? We saw again yesterday weak auctions. The yield moved higher again. The markets had a flavour of this last year amid concerns around what was coming to market. Well, just give us a sense as to how you're thinking about that overall US debt position and the ability of these yields to rattle the market.
When we look at the US debt, of course, it's an amazing debt, $34 trillion US dollar. I think that on the other side, those are just the numbers, but on the other side, we know that China and even Japan wants to bet on other kind of debt than the US debt. So we have less demand. That's why, of course, the yields are going up. So I guess it's a pretty difficult game to play on because at one point we have also the political issue that is involved when you need to know how the US Treasury yield, where it's going to be in the future. So I know that everybody's looking at the debt. I'm more looking at the interest and the charge of the debt that is more than $1 trillion in the first quarter. So, I mean, it's something that worries me, but I don't think it's something that could crack the market in the coming months.
All right. I mean, I want to just, John, if I may, for my last question, just go back to perhaps the conversation we had with Neil Kashkari just yesterday. And he was saying he doesn't want to rule it out, but 0% rates are pretty much not on the horizon. What do you think? Do we ever get back to that state and that stage again when you have inflation, which looks like it's staying relatively sticky, and government spending, bringing up that debt, for example, to the levels it's at?
No, I don't think we'll go back to 0% rate. I think that the COVID changed everything. You know, nobody talks about the COVID anymore, but it has a huge impact on the US debt, on the global debt, of course, that just reached a record level at $350 trillion in the global world. So I don't think, in fact, we'll go back to the 0% interest rate. I think that the rates will stay higher for longer, even if the Fed, if we're talking about the Fed, they cut 3 or 4 times. So it will be a total different future, if I can say that, for the rate and the rate assumption. And I think the consensus is beginning to understand what is going to be the future. The future will be with higher rates for longer. When I say longer, it's for several years.
Interesting commentary, actually, as well, then. John, appreciate the time this morning. Thank you so much for joining us. John Plassard is the Senior Investment Specialist at Maribold Group. Now, on a special programming note for our CNBC Pro subscribers, I will be sitting down with Claire Pladel-Bouverie, who's the fund manager at Lion Trust Asset Management. And this is for an extended conversation about the next wave of artificial intelligence investment opportunities. Of course, Nvidia being the big one there. So how about we go beyond Nvidia and the Magnificent Seven? What else is there? What lies beneath? That begins then at 1 p.m. CET at cnbc.com/pro. Do stay tuned for that. Now, the IMF has raised its growth outlook for China. It now sees the country hitting its growth target of 5% for the year, up from its previous forecast of 4.6% made last month, after stronger than expected GDP data in the first quarter. An IMF official said China's GDP could grow 18% in 15 years. That's if the country implements economic reforms to strengthen productivity and create a good environment for businesses. Now, coming up on the show, polls open in South Africa for what is said to be the country's most competitive election in 30 years. We'll have a live report from Johannesburg. That's coming up next. And plus, the clock ticks down for BHP and Anglo American as the pair rush to hash out a deal ahead of today's deadline. And UK Shadow Chancellor Rachel Reeves rules out surprise taxes for the Labour government as the opposition party steps up pledges ahead of a general election. We'll discuss more with Simon French, the chief economist at Panmure Gordon. That interview is coming up at 10:45 CET.
Ambition to me is about doing better.
I think ambition creates a pathway.
The best advice I can give to someone starting off a career is don't have a career, have lots of careers, try loads of different things.
Talk to people and put your ambition out there.
I don't feel that I've hit peak ambition because it's a learning journey.
CNBC is where ambition meets opportunity. What does living ambitiously mean to you? Hear it from our CNBC anchors, reporters, and global business leaders on CNBC.com.
The United States will not change its policy towards Israel after Sunday's deadly strike on a Palestinian camp, calling the incident tragic but saying it did not cross their red lines, which would see further air aid withheld. This as Israel continues its push into Rafah, with tanks seen reaching the city centre despite international calls to halt the offensive. NBC's Alice Barr filed this report.
Israeli tanks pushing into the center of Rafah, according to an NBC News crew on the ground, raising urgent questions over whether Israel has crossed President Biden's red line, warning against a full-scale assault on the densely populated southern Gaza city.
We have not seen them smash into Rafah. We have not seen them go in with large units, large numbers of troops. We're going to watch this hour by hour.
The Biden administration responding as horrific images from a weekend airstrike at a Rafah tent camp for displaced families trigger fresh outrage.
It's horrific, it's heartbreaking, and it needs to stop. We also have to remember that we are supporting Israel in their fight against Hamas.
Israel says it targeted and killed 2 Hamas commanders, but in the process, an Israeli official tells NBC News it appears an IDF bomb ignited a gas tank, sending flames sweeping through the camp, killing at least 45 people, many of them women and children, according to the emergency services in Hamas-run Gaza, and injuring hundreds more. Israeli Prime Minister Benjamin Netanyahu promising an investigation investigation into what he initially called a tragic mishap.
We will be watching those results closely. And we will continue to emphasize to Israel their obligation to comply fully with international humanitarian law.
At the same time, the U.S. military forced to suspend aid deliveries by sea into Gaza because a temporary pier was damaged in bad weather. Another blow in Gaza's dire humanitarian crisis.
Israel is showing no signs of complying with the United Nations top court's order that is largely symbolic to halt that Rafah military operation. It comes as Spain, Norway, and Ireland all formally recognized a Palestinian state, another sign of Israel's increasing international isolation. In Washington, Alice Barr, NBC News.
Now, voters in South Africa go to the polls today in the country's most competitive election since the end of apartheid. Let's cross on over to Johannesburg now, where CNBC Africa's Godfrey Mutizwa joins us for a little bit more. Godfrey, it's D-Day ultimately now. It's no longer about the bluster, but really about the votes that certainly come in. Voter participation, voter apathy has always been a question mark then for these elections also.
Absolutely, Arabile. Good morning. Yeah, the voting stations have opened in Johannesburg here. From what we can see all around here in Sandton, of course, it's largely peaceful, but there haven't been any reports of any violence beyond what we had in the eastern province of the Eastern Cape, where there was disruption of the distribution of ballot boxes. But I wanted to talk a little bit about politics today, Arabile. We don't get too much opportunity to talk about that on our business channels. Really, this election is being fought in three main provinces. It is, of course, Gauteng, here where I am, the economic heartland of South Africa, a third of the GDP coming from here. And here there's a real risk that the African National Congress could end up in a situation where it does not have majority control of the province. And then the big one has got to be KwaZulu-Natal. And this, of course, is the original home of the founding father of the African National Congress in 1912. And there, the fight, which had been clear, was going to be between the African National Congress and perhaps the Democratic Alliance, has been splintered by the emergence of the Umkhonto weSizwe Party of former President Jacob Zuma. There, Arabile, it's expected that vote is going to probably go three ways, and that will make it difficult and messy to form not only a provincial government, but also the national government. Then the other big fight is in the Western Cape, where traditionally, at least in the last 2-3 elections, the opposition Democratic Alliance has been dominant. There, things have been muddied up a little bit with what many are calling identity politics, where you are seeing smaller parties emerging and speaking to specific issues. For instance, the Muslim community. There's a large Muslim community in the Western Cape. And then you have got the colored community, which some are suggesting is rallying around a former convict, Gayton Mackenzie, whose part, the Patriotic Front, has, in some instances here in Gauteng, been in bed with the African National Congress. All in all, Arabile, promises, I think, from a news reporting perspective, to be exciting, but certainly in terms of forming a national government and perhaps economic policy going forward, it might be all up in the sky. We'll certainly be following it from here, Arabile.
Yeah, Godfrey, I mean, those are also the bedrocks of economic activity across the country as well, right? And while there may be specific issues for each one, the general consensus has been not enough by way of jobs, job creation, that is, of course, the situation around corruption, but even just economic growth and stability when it comes to power supply as well. So all those main issues still in focus, still in play across this election.
No question about it. But here's the interesting stat, Arabile. About 6 months ago, I was in a debate with the leader of the Democratic Alliance, John Steenhuisen, and he made a claim that the Western Cape has been creating jobs while the rest of the country has been bleeding jobs. 300,000, he said. We went back and we checked the statistics. The Western Cape economy has been growing. The Western Cape economy has been creating jobs. Number one. Number two, in terms of tourism, the Western Cape has been booming. We were down in Cape Town about a month ago, and I can tell you that every single establishment that we were able to to sit and have be it lunch or breakfast. People are talking about a busy province. And this has also been corroborated in the numbers that we have seen from the National Statistics Agency, as well as companies such as Sun International, as well as the other companies that are operating in the Western Cape. So it's almost like you've got a two-track economy. The Western Cape economy is doing reasonably well in a very difficult environment within, as you say, the power shortages that we're talking about, which, by the way, is the subject of many debates amongst many people. Many suggesting that even though we've had 62 days of uninterrupted power supplies, very soon, in a couple of days, we may see those power shortages remaining and load shedding coming back. I don't know whether that's going to be the case, but we're certainly watching that one with interest, Arabile. And the results, by the way, by the weekend.
100%. Big question marks around whether that was electioneering in the face of these elections coming up then as well. But we'll certainly make note of that and see how things fare. Godfrey, appreciate your reporting this morning. We'll continue with that update across the day. CNBC Africa's Godfrey Mutizwa joining us from Johannesburg.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to cnbc.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.